Mic not working. That's fine. All I said was good morning. I got it. Okay. I got it. All right. If there wasn't this lag, that would be really convenient. If there wasn't this lag. Okay, I know. I'm going to wait for everyone to catch up. Okay. Once everyone's caught up and the sound is good, we'll get it started. There we go. Okay. So there's about, I guess, a 15 to 20 second lag. Okay, so let me just make sure that this works properly now. All right. Good morning. So we have got a few people in the stream. Let me just make this window a little bit smaller. God, this shit is just like, dude, 10 different things. Okay, so again, good morning, good evening, good afternoon. What's going on, everybody? Let me say hi to everybody so far. Sweet Canary, Dave, X Factor, App, Pascal, Fuzzy, Baden. What's going on? Oh, made it live for a change. Well, welcome. Happy to have you here. Carlos Cifuentes, Crypto Life 101. How are you? So I'm becoming familiar with a lot of you now. Basclef, cool. Okay, Nam Nam. Yeah, we know this now. We know that, sound, audio visual is not my forte. Okay, Connected MCM. Recognize you. D. Ross, what's going on, pal? Werner. Boy, David, Ved, Math, Michael. Okay, so we have a bunch of people in the stream. For those of you that are new, welcome to the BlockRoots YouTube channel. As a reminder, if you go down to the lower right-hand corner of the screen, if you go around to right here, okay, you should see a little box. And if you go ahead and click that, then you can subscribe to our channel. And we do these streams Monday, Wednesday, and Friday at 12 p.m. Eastern Standard Time. That's New York City time, 17 UTC. And we are hopefully going to be your non-sensational source of crypto market education, trading, and investing analysis. So, that being said, on behalf of my partner Josh Rager and I want to thank you. I don't know if I already said that. That is the drawback of not going along with a script like your favorite YouTube influencers. But okay, so we don't have a really good like to viewer ratio right now. We definitely want to get that viewer and like ratio looking a bit more attractive, because again, the purpose of this is to try to be front and center on YouTube and to compete with all of the garbage that is on it currently. Okay, so now that I said hi to everybody, see if we have anyone new in the chat, and then we will cut to the live screen. How is everybody doing? Is everyone enjoying this volatility? What I'm going to try to improve on in this stream is the transitioning between the live screen where I'm sharing a chart and out of this chat screen. So for those of you that have been following along now since the beginning, you know that almost every stream will be in this live chat, and I'll be addressing a question about an altcoin or something, and we'll have gone to this chat after looking at the chart, and then I'll forget to transition back to the chart, and I'll be on my chart pointing things out and forgetting that none of you can see that. So we're going to try to improve upon that in the stream and make sure that we don't have that happen, because that's annoying. So let's go live. Okay, so the Phemex trading competition is over. The BlockRoots team, I believe, finished 6th. Very proud of the team. That is awesome. Very, very nice to see that. I think there were about 30 to 40 teams, so that is a good finish. Okay, that is a good finish. Jake, what's going on? Ripcord. Okay, hey Dave, starting to regret your selling of some spot. Okay, ton of garbage. Took a long scalp. Still waiting on my million, my friend. Okay, John. All right. Okay, I think that is everybody that I know. D. Ross, any chance of winning $100 today? D. Ross, you won twice already. So that we're not doing a giveaway during this stream, but the next stream we'll do a giveaway, and I'll make sure that I make the question nice and difficult. Even though that doesn't seem to do anything, because you are the You're the only one who's won on multiple occasions. Okay, so let's cover some things really quickly. All right, let's take a look at the news of the day. All right, so Pfizer, right? Everyone knows why the markets are moving this morning. It's not because traditional markets opened and now they're embracing the idea of Joe Biden being the president-elect. I saw someone from Bloomberg share that. As if the market was taking that long to disseminate the information, right? We saw that there was an immediate response to this Pfizer news. Okay, so Pfizer soars as vaccine prevents 90% of COVID cases in study. That's phenomenal. I would take a lower priced Bitcoin if it means that things go back to closely, or not go back to, because I think that that's a naive thing to think that things are going to go back to normal. But that that things begin to improve. If you just think about all the industries that have been hurt, from where I'm from specifically in New York, ton of restaurants just going under, ton of small businesses going under. So anything that inches us toward that direction, I think, is something that we should embrace. Not going to get into any, of the conspiracy ideas as to this being released after Biden was confirmed president and talk about Trump and all that kind of shit. I think we should all just try to get on the same board with regards to everything improving and the lives of people improving, especially the lives of people who have been directly affected by COVID, whether or not that's having a family member they've lost or someone that has been sick or job that they lost, just being displaced emotionally and financially. So I think that the best thing that we could hope for is that the best thing that we could be is optimistic, I guess. So markets moving up. ES, we saw that the ES, the Dow Jones, I think up 7% today, right before open. And if we just go through some of the large caps, everything across the board moving up as well. Now, it's not everything moving up. So there are certain things that are moving up that I would say we're obviously on the wrong end of the coronavirus. So, Disney, for example, up today. You're likely going to see your airline stocks up today. Anything that's cruise related up today. Anything that has to do with literally people leaving their homes, right? Consuming outside of their homes. Try to keep it as simple as possible. Things that are you were able to do from home. Go on Zoom sessions, okay? Play video games. All of these things that benefited from, and that's really what I'm just trying to say, all the things that benefited from, you being cooped up and locked down, they are experiencing, obviously, the downturn rather than the upturn in markets. So we just go through some of the large caps right now. We could see that, for example, let's look at Disney. That is a big one. I really think that, I'm really hoping that Disney improves over the coming months. Why? Well, because in March, my wife made me buy Disney and add to a Disney position because she's a big Disney kid. So I think that Disney represents, in some ways, the United States to some degree, right? It represents a level of optimism. It represents the United States consumer. And this is a company that has been around for a really long time. And I think that out of all this, it would be a damn shame if I couldn't take my kids to Disney one day. So as simple as that sounds, it's just something that I'm paying attention to because it does represent consumer confidence and overall confidence of people in the United States. So Facebook down. Well, why is Facebook going to be down when everything else is up and Facebook is tech? Well, Facebook, you can imagine, benefits from people being at home and looking at ads. So once people are no longer stuck inside and on Facebook for all hours of the day, you can imagine that attention leads to money, and if there's less attention, there's going to be less dollars attached to this. So things like certain things within tech, for example, I imagine if we go to, I didn't look at Netflix, but Netflix is down, of course. If you look at Zoom, Zoom is down. This should be a very easy sort of first order connection to make. All the things that have suffered are going to be improving. All the things that have benefited from the virus are going to be obviously on the wrong end of this again. So equities moving up. What does that mean for, let me see if let me just leave the chat open. Okay, so we're going to cover this really quickly. I just want to touch on this. So we saw this morning that equities moved up. All right, so we'll go to the list for the day. ES moved up, E-mini futures moved up. Initially, BTC moved up as well. So if we go down to a lower time frame chart, we go to the lower time frame chart, we can see we had the ES pump. Initially, Bitcoin pumped as well. And then Bitcoin completely reversed. All right, so we saw Bitcoin reverse, and what did Bitcoin follow? let's just add this to here. I don't know why it's not in this watch list. Bitcoin started following gold. All right. So as you can imagine, one of the direct effects of the virus was a lack of spending, was the consumer pretty much locking down for obvious reasons because they were enforced to do so. But that's what made stimulus, part of the reason what made stimulus so important. So if we're starting to see that there is potentially a cure, a vaccine that is going to have, that is going to be effective at curbing this problem, well, then the idea for stimulus might be something that, if we're not going to completely nix, we might shelf in the meantime. So if we're seeing that markets are moving up and that there's no need for this stimulus, well, then some of that argument for BTC and for gold kind of goes out the window, because at that point you have tighter monetary policy and a possibility for interest rates to start increasing again. All right, so there's this complete knock-on effect, and I think that what you're seeing this morning is, the correlation between gold and BTC is likely being enforced by fast money, so hedge funds that are playing this correlation. I don't think that in the long run that the people that have a long-term thesis for BTC are going to be selling right now. Because again, when equities are moving up, when traditional markets are risk on, I think that you're going to see that Bitcoin follows that, and that this sort of short-term correlation that we can't decide on is, it's just part of an asset being immature. All right, so make no mistake, Bitcoin is maturing. It is becoming a more macro asset, definitely. As of the last 6 months, that we've seen a ton of evidence for that. But I wouldn't say that, because now stimulus is off the table and just because gold is going to be moving down, right? Even though I think that gold is probably going to be a buy around 1800, just because of that, it doesn't mean that suddenly now the whole narrative, the whole reason for why Bitcoin has gone up is suddenly you're going to reverse, and now Bitcoin is overnight bearish because the idea of the stimulus being on the table was the main driver, and now the stimulus again might be on the sidelines for a little bit. That's in the short term, right? You're seeing that the market is overreacting to this news, and I think what it's showing you is that people are just jumping at the possibility for anything positive to develop, and that should be expected, right? It's been a the last 9 months, 8 months have bred a lot of cynicism with regards to anything improving. So the first sight of improvement gets everyone excited, okay? And you could expect that this will probably persist unless we see any kind of negative news to the contrary of what we saw this morning. So I am not changing anything with regard to my BTC positioning. I got risk off the other day waiting for futures to open, and that was just risk off with my swing positions, or what swing positions I was looking to develop. Swing positions not being my spot, but being with leveraged futures. So in this case, perpetual swaps, any kind of leveraged product. Okay, so let me just see if there's anyone new before we get further into this. Okay, John Brunson. John, nope, said hi to everybody. Okay, I'll look over at the questions in a second, guys. I just want to take a look at BTC. So equities obviously right now have stabilized. It's not that this thing is going to just go to the moon from this point. I think that you're going to see a 4K S&P by the end of 2021, maybe even by mid 2021. So this obviously this has had a good amount of selling pressure that's come in after the initial pump. Right, you get a lot of excitement in the beginning, but people are going to be taking profits on this because it doesn't automatically mean that you're going to start to see this thing get away and the entire market's going to move in that direction. So, looking at BTC, all right, there's a few key levels. I just want to go over these and remind everyone again. So let's zoom out on the weekly. Okay, we're not really close to what I would say are good contextual levels to define risk. So if you're looking to add to a position right now, if you're looking to build a spot position, for the sake of argument, this is not the best area to do it, right? Up here, we're very extended from any area where you could say is a meaty area, where you could really define your risk in an optimal way. You do have the top side of this wick, but ultimately most of the structure is lower, and that's around your 11.9, 11.6 area. Doesn't mean that we're going to come all the way down there. It doesn't mean that you should start just placing bids there with the expectation that that's going to happen. But this is just to show you that the market has gotten extended. And previous times when we've made these pushes upward, we've come back to retest that structural level. So we've impulsed through a level impulsively, right? Impulse through a level impulsively. We've left an area impulsively, nuked a level, and then over time we've gone on to come back and retest it. And that's in terms of immediacy. That doesn't happen right away, but I think that you can expect that more often than not, Bitcoin will revisit these higher time frame levels. It doesn't mean that you're going to revisit a level down here. It's just that after we've been quite extended, you have to start looking to the best area to do business. And I think that it's a combination of structure and at this point, more than likely moving averages. So your weekly levels are down here. All right, you could say that, if you want to just calculate this or if you want to call this a zone, I would say anywhere from 12.5 to 11.9, right? All you're looking at is these swing points where price found resistance previously. Okay, we've respected the ones prior to the breakout, so we don't have to look at those anymore. But now as we move further up, all right, the last areas of resistance, okay, the area where price had a fair amount of trouble dealing with and then ultimately ended up nuking through, that is an area where you could say is contextually a good area to add to a position if we came back to it. It's the same idea as back here, right? Same idea as this sort of 10K retest where everyone was suddenly becoming bearish, forgetting that, this is in the short term, it might look like a bearish retest of the underside of the structure, but the big picture context is upward at this point. So 12.5, right? 11.9, 12K. If we came back down to there, I wouldn't miss a beat in terms of buying the dip, right? If we were given that opportunity. In terms of more local levels, we'll just zoom out and place these on the chart. So this level right here, this 3873 level, that's a previous monthly all-time high, and that's also this weekly high. So if we look back here, that previous weekly high, and that goes back to 2019, and then if we go to the monthly, that is the monthly high, right? So now we have actually put in a higher monthly high. We haven't closed it out yet, though. So that's something that's important, right? The idea, remember, is that, your monthly candle is a massive data set, right? We could move through it, spend 3 weeks above it, and then turn that 3 weeks into a wick and then close back below it. So right now, this day, this monthly candle has 21 days left, right, before it expires and before it's actually printed on this chart. As you're looking at it right now, it could ultimately turn into a wick, right? This monthly candle can turn into something that looks like this, and then you'll have everyone that is, ultimately very bearish. So that is an important level. I would say for lower time frame reactions, you could get responses there, but it's not like you're looking at this level to hold price up on its own, based on the fact that it's so much further back. It's more of a psychological level at that point. Forward looking, we look at these levels because they're really all we have, right? To a degree, once you start moving further up, it's not like we have a ton of structure to look forward to. You're more in a price discovery, you're more in a price discovery phase, but also down around this monthly level, right? Just for the purpose of labeling it, I think it's important to refer to it as that. But there's more to it, right? It's a previous consolidation high. So if we look at this consolidation before this markup right here, you can see that that's really where the meat is. So we're looking at the top side of, this goes back to October 27th. We had two consolidations. So we had a consolidation, then we had a move upward, and then a wider consolidation. So this was a very tight compression. This tight compression led to a larger range with more dispersion, but it's still, value was pretty much trapped within this, in this case it was about a $600, $500 range. So we have the value area high of that previous period of days, and that goes from October 27th to November 5th. The top side of that structure is around 3.9. The point of control of that structure is around 3.7. So between those levels, my point is that you have a good amount of confluence, right? So you have your monthly all-time high, you have your weekly high from 2019, all these important psychological levels. Again, they're so far back that there's a very slim chance that they have any meaningful impact in terms of resting liquidity, right? In terms of there being resting order flow on that, or not resting order flow, in terms of there being actual order flow memory or any kind of resting liquidity still sitting there, acting on behalf of that level. So it's all a matter of, okay, are we deeming this level to be important, and then acting on behalf of it as we reapproach it. But there's a bunch of different reasons why it is, I guess, a little bit stronger now, other than just that, right? You have, again, value area high of this consolidation. You have the point of control right around the same level. And then also, if we look at, we'll just put this on, we have the 20-day moving average at this point, which again is sort of your line in the sand if you're going to determine, who's in control on the daily chart. And right now we're quite extended from it. So more often than not, in a bullish trend, you're going to be quite extended from the 20 period, but again, you'll come back and revisit it. So we haven't had a revisit of it yet in this leg. So my point of pointing this out, the purpose of me pointing this out, let's not be redundant, is to point out that if we were to come down now, right, This 20 period moving average, which is lagging, would not have moved up further, and it's right around this general area, right? It's sort of, we have this 4 or 5 pieces of confluence that are around, you know, your 13.7, 13.9 level, to expect that, hey, if we do get a break, right, into this level, maybe that is a good buying opportunity. Not to say that you should be buying that area indiscriminately, but this is the first area to maybe look for a sign of strength developing within price action. So strength developing within price action, what do we mean by that? So if we get a breakdown, we get a low put in, another stab at a low, and then price is beginning to trade above prior levels, and we have some type of range established, well, maybe at that point you have a trigger for a long. You're looking at something that develops like this down here, so the move into the low, maybe other signs as well, such as funding going negative, all right, futures trading at a discount to spot, all of these other positioning tools to really build a case that, hey, maybe the low is taking place right there, and also informing that decision with the fact that there's, you know, 4 to 5 points right there that do line up as potential significant levels. And also, you know, we haven't retested that 20 yet in this leg. And you'll see that the 20 period, you know, why is the 20 period significant? Well, if you look at someone who trades Bollinger Bands, it is the center line of that Bollinger Band channel. So let's just say 13.7, 13.9, between that window. Sorry, guys, this thing is like tension headache with the hat, but my hair is just absolutely insane. 13.7, 13.9 as a potential high opportunity area if price comes down there and immediately finds a level of response by buyers. Then we'll start to look for the signs that maybe a long is developing from that location. That being said, that level is, again, it's not really meaty when you zoom out. So if we're not on the daily chart, you know, that level doesn't really look like anything that is significant. It does come back down to the, you know, 11.9, 12K area. So the point is, you know, in mentioning that, let's say that this level doesn't act as support. You know, we have really significant levels below us that should serve to, I guess, assuage any fear that you might have if price, you know, immediately takes this level out. This trend, in my opinion, is not invalidated until we're back below a prior low within the trend, right? So it's been messy on the way up. We've come back down to violate the previous highs of the structure. So it would be completely normal to do something like this. And as long as price maintains this prior structure, I think that, you know, all systems are still go. It is to be expected that things eventually move sideways, right, and get boring. Trends don't just continue to move up to infinity. And, you know, at this point, we've had if we're looking at the last few weeks, we've had 1, 2, 3, 4, 5 weeks in a row of just upward price action. And a lot of people forget that. They're paying attention to price right now, and they're thinking, but you know, everything is bullish. Well, yes, of course, everything has been bullish, right? We're 5 weeks into a bullish trend. If you want to just look back previously, okay, if you were to judge Bitcoin, this time, this context might be slightly different, okay? You have multiple weeks in a row of just a strong bullish trend upward, but this was the first time retail was really coming into the crypto market. I think more recently, you should be looking at the amount of weeks that we've had in a row that were green and maybe using that as more of something that informs your bias, right? Okay, you know, previously 4 or 5 weeks in a row of a bullish trend or of green candles, that has typically been the point in which we've reached, or the maximum candles that we've reached to the upside before we've entered into some level of, you know, some period where we've lost momentum, had some level of absorption, or absorption. We'll look for signs of absorption or exhaustion. So that's where we could be right now. It wouldn't be abnormal. It'd actually be pretty damn normal at this point and to be expected. Last night I mentioned in a tweet that, you know, Bitcoin is probably going to be ranging, right? I think that price action, it's uninspiring. It's making its way back upward, right? We reapproached the high, but immediately started to see that futures were trading at a premium to spot again. We started to see that the funding rates were going much more positively than they have been this entire trend. So if we just zoom out and we look at basis, again, basis is something that informs the funding rate. The funding rate is a derivative of basis, this premium index. You can see for the duration of this trend, from left to right, we've spent most of the time in the negative. So this is just saying that for the majority of this trend, the spot has been much stronger and futures have been trading at a discount to spot. And now, this is a high where we have the opposite occurring. And the other times where we put in highs, the one thing that starts showing up is this premium index starting to go positive. Mind you, this is just on BitMEX, but all of the other exchanges are looking exactly the same. You can see that if we look at the funding right now for just the top exchanges, we'll go to Binance, we'll go to Bybit, we'll go to OKX, we'll go to BitMEX, and we'll go to Deribit. We go to FTX2, excuse me. Majority of the last few days has been in this positive territory. Okay, so this is just one of the hallmarks of a turning point in the interim, right, for a bullish trend where the futures start to get a bit more extended than the spot market. All right, this is normal, right? In a bull market, you're going to see people want upside capture. You're going to see them pay a premium to gain that upside capture. You know, just think of it as an interest rate component for getting extra long. But again, when the market is moving sideways and you're starting to see this, it's just a sign that for the effort that's coming in to get long, the market is no longer able to achieve a higher price. So right now, I would anticipate, you know, a more of a range to build. I think that, again, your levels are around 13.9 to 13.7 initially. And then our lower levels from there, we're looking at, you know, I still have them labeled from the prior consolidation down here, 13.1, 12.8, 12.9. Below that, 12.5. So we have a bunch of different levels that as we do the live streams, we'll continuously update what our opinions are depending on where we sit in relation to these. In terms of the more recent structure, so if we just look at this, if you were looking at this on a 5-minute chart, if you're looking at this, this is a daily chart, you have 1, 2, 3 days now back to back where they're essentially, we'll go to the TPO chart, these are essentially inside days in terms of value. All right, so you had an inside day yesterday. Okay, so you had an inside day yesterday, so you technically have an inside day setup, breaking out of this open or this close, but you can see as the market came above and approached the low again, there was no follow through in the break above. So if we're looking at this structure now and we say, all right, so before this day occurred, okay, after we closed out yesterday, we had an inside day. So the high, the low, completely within and engulfed by the prior day structure. Okay, so this is a compression and volatility, right? But if you're looking at the structure, it's not like it's the most optimal conditions for a breakout or for one to occur that violently because you have a lot of dispersion in these alone. So this is not a balanced structure. If it was a inside day that looked like this, right, where you had balanced structures, that's one thing. You know, this is a completely out of balance structure. This isn't an imbalanced structure. So the breakout, I think, is going to be something that struggles for sure. You definitely didn't get it following through to the upside. So I think that the argument is stronger for downside at this point. And that just means that, hey, maybe we get this wick back down to this low to find out if that buyer is still there. So we're looking at this excess, that buying tail at that low. I think that ultimately the break can occur still with this inside day setup, with this yesterday open that we had. So with this yesterday open, that sounds ridiculous. With the yesterday open being 14,850, 14,841. So you don't need to look at a TPO chart to see this, right? You could see that this is giving us a very nice levels in terms of our high. You know, we have first day into this move. Okay, second day, we have a doji candle. Day prior, yesterday, not even able to get above this level. So you see this level is respected for the last 4 or 5 days. It's clear that resistance is doing its job, right? It's clear that support is still doing its job, you know, coming back down to that support again today. So again, coming back down to around, you know, your 14.8 level. But I think now if you do get that acceptance below here, you're getting the move down to this 13.8 level. You know, prior consolidations after markups, you see that the first low is really defended. And I'm not necessarily sure that this is the first low now to pay attention to, right? So first low, okay, go back here, first low, okay, where we're looking for that interaction after the markup, right? So after the markup, first low. Okay, so markup, you got more of a kickback with that low right there. So to think that this is just going to respect this moving forward, I don't know. It's tough for me to assume that. I think that it's more likely that you do get the revisit back down to this structure. So for a trigger, you know, it still works on both sides. You know, at this point, top side has done its job at rejecting. So if after being rejected from this level with that amount of you know, oomph, if we're able to close back above, let's say 15,750, I think that, yeah, you get more of an expansion to the upside. I don't think that that is something that I'm anticipating that's going to happen immediately. I think it's more likely that you could just be seeing this ranging throughout here. All right, so to build some type of range and these levels be used as, you know, your breakpoints, right? So if we look at this structure on the TPO, we'll just make a composite of the last few days. This is more of a trending day. I'm not going to really include that, but what we're looking at is, let me get the levels for you. What you're ultimately looking at is the value area of the last few days being between 15,160. That leaves out yesterday's open though. So, you know, we could be auctioning within this level. I think that more than likely you're seeing that we're coming back down here either way. I want to see that test at yesterday's open. You know, maybe the value area still, maybe it includes that with the trending day, but I'm not normally going to create a composite, you know, based on the trending day. So we're not trying to fit this so it looks good, right? Now, that would even be closer to the day, but still, this is more of a trending structure, an impulse structure. I'm not normally going to include that, although we're including that in the high, right? So we're including that in this high. It's not ideal to create a composite and include the trending day as part of that. If you're creating a composite, it's after you've had a markup or mark down, and then you begin to auction sideways, and then you're creating what results from that sideways price action. You're turning that into a composite from there. So the level specifically, again, that I would be looking for to break, it's your daily level right here around 14.8, and then around 15.6 again. At that point, your resistance is above. They're not very clear. You have 16.224, right, from a prior weekly level up here, and then your highest weekly close at 19.287. So it really leaves a lot to be desired for with regards to what are the levels that are above us, right? And that's because of where we sit. We're in an area it's pretty much uncharted territory. All right, so let me see if you guys have said anything in the comments for a second, and then we'll go through some other charts, some things I'm paying attention to. ES now beginning to move up again. That's good. This is again, you get a big response, and more often than not, into lunch, you're going to see that people are going to be taking profit from those early trade positions. Right, now let's go to the chat. Gotta fix this. Trying to fit this into the window so it looks semi-decent. Okay, all right. What's up, bro? Said hi to everybody. All Bitcoin miners. I don't think a whole lot about Bitcoin miners, John. Bitcoin miners are going to hedge with futures more often, so I'm not worried about them really taking profit versus hedging with futures. Is it reasonable to suggest that plenty of Wall Street will still put pressure on the government for stimulus? I think that Wall Street is happy with Biden as a president because Wall Street is happy with stability. So Wall Street, say what you want, but if you're a portfolio manager, if you are anyone in the financial services industry, the fact that someone can tweet and it can really shake the market is not something that Wall Street really desires. So I think Wall Street is going to really appreciate stability in terms of the president-elect. I don't know if they're going to be putting pressure on the government for stimulus still. We'll see. I still think we ultimately do get some form of stimulus. I don't think that it's going to be as prioritized if the vaccine is front and center. Okay, Nam, where can I access the TPO charts you're using? You could go to ExoCharts, so you could go to exocharts.com, or you can go to Sierra Charts. That's what I use. Okay, how do I access the basis indicator on TradingView? You go to indicators and then go to BitMEX neobutane. Okay, funding and premium index. So just as a heads up, there's a whole lot of talk about whether or not BitMEX is relevant anymore. It definitely is in terms of order flow, and mostly every exchange follows other exchanges, right? There's a ton of exchange fragmentation, but in terms of derivatives, right, when we see that Bybit is trading at a premium to Coinbase, more often than not, you're going to see that shared across other derivative platforms as well. Same on Phemex, same on BitMEX, right? So it just happens to be that the indicator that I still look to get that information is the BitMEX funding indicator. But you could, I'm not just looking at this. This is the easiest one to share on TradingView for me, right? I haven't changed things up too much on TradingView, but I look at all of the other exchanges regardless, right? So if I post something moving forward, right, if I say futures are trading at a premium to spot and you see me reference this chart, I've already done my homework and had made sure that I'm not just showing you something that is on one exchange and is not shared across the market. But that is the neobutane indicator, and you can find that for free on TradingView. So let me switch over to the screen. So it's right here. Oh, almost messed that up. I did. I was late. Damn. So it is the BitMEX Funding and Premium Index right here. Okay. Do you scale your size depending on time frame? I have different approaches depending on time frame, or depending on the entries I take. So if I am trading a position, if I'm trading larger, if I'm trading more of a position trade, so when I say position, it sounds confusing because it's like a position, but a position trade meaning a longer term trade, more between a, somewhere between a swing trade and an investment. I'm looking at the higher time frame charts, trying to get active around higher time frame levels. So that 10K area, 9.4 area. If we're looking at BTC right now, we just look at the, specifically it is the, right down here. I want to get rid of some of these. Keep the blue box. Okay, so if we look at between 12.5, 12.1, that's somewhere where if we came down to that level, I'd be looking to add a lot to spot. Generally speaking, I'm willing to add more in my spot, obviously, because it's non-levered. It's, I'm not at risk of any kind of liquidation. I could have price move against me a bit more comfortably versus me trading with leverage on something like a perpetual swap and scalping, where I'm trading on behalf of my account value, but depending on how much I have on the actual exchange, I'm going to be using leverage to represent my off-exchange amount. Okay, let's see some more comments. But I have a pretty, so X factor, I have a pretty standard size for scalping. Is there a certain amount of USD that you keep on hand for bigger drops? Yeah, so I have a substantial amount of dry powder. But I'm definitely very much exposed right now. But yeah, there's always, so not to get into my specifics, not to get too much into that, but you should always have dry powder. I know it's it's something that not everyone can say they have, because of course it's not like everyone's dealing with an infinite amount of money. And obviously everyone wants to make more money and have more dry powder if they could, right? It would be the thing that they would wish for. But I always I never fully deploy, because I want to be able to take advantage of drops. I want to be able to take advantage of other opportunities that pop up in altcoins from time to time. So it's always important to have some, fuel on the side. Can we look at the ETH 5-minute chart? Sure. So ETH 5-minute chart. Let's just put ETH. I think I have ETH's level still on. Okay, so ETH, my most important level was back here, that 390 level. Looking at where we are right now back above this weekly high. Looking at on the 5-minute chart, decent retest of that monthly and weekly level. I think that ETH is going to follow BTC. Right, if we continue to see selling pressure in BTC, I think you'll still see it with ETH. ETH has a nice little range that looks like it's forming right here, though. Right, so just on this 30-minute chart, on this hourly chart, the same sort of idea though with the last few days. Right, same as BTC. So if you look at ETH structure, if you look at BTC structure, it's the same thing. You have a bunch of, they're not, maybe some of them are not technically inside days. Like this day right here is not an inside day, but the day prior was. It's just the idea that the market is compressing up here. So any kind of break above, at this point with ETH, break above 456, or break back below this monthly, weekly level, back below this low right here of 435. I think that you end up coming back down to this 4 level. But we'll see. ETH against BTC right now, showing signs of strength in the last week, but pretty much just flat and not doing anything one way or the other for the last few days. So the ETH BTC chart is important to look at because it's going to show you relative strength or weakness. Fuck, I didn't switch the screen again. Let's do that again. Oh my god, man. I need an audio video guy. Okay. Yeah, I know, I got you. All right. Let's do this again. So ETH, I started this stream, I jinxed myself. Let's take a sip of water. All right. Let's get back on our feet. Okay. So this 390 level with ETH being the most important level, sir, please, yes. Being the most important level. Guys, there's a lag. So I'm always going to catch on to things, but there's going to be a lag. So once I catch on to it, it's going to take a second. 390 level being one of the most important levels to me. Now back above, though, or now above the higher weekly that we put in. So going back to July. And now on the 5-minute time frame, you know, you specifically asked about the 5-minute time frame. We have a nice retest at that level, but I think that ETH is largely just going to follow with what BTC does because you have the same exact structure, right? So you have this same sort of prior inside day structure right here, all right? And I think that either way, whatever direction Bitcoin chooses, ETH is now going to follow. We see that there's not it's not like ETH is walking to its own step right now. In the last few days, ETH BTC chart mostly moving sideways. Yeah, we will try again next stream. Yeah, so ETH is more than likely going to follow BTC, you know, and neither of them look bearish or anything, right? It's just that the market is. If I look at Bitcoin right now, and this is why I started tweeting about this the other day about funding and basis. It's the first sign that the market is getting overheated, right? So that's the first sign the market's getting overheated. Again, it's reason to pay attention. The point of looking at this when it's going all positive again is that for the most part it has been neutral and negative for the consolidations and moves up. So once it starts to go positive, that's not abnormal because you can imagine that in, you know, the state of an incredible bull market, there's going to be people that are going to be looking to long on futures. We have seen that spot has driven a lot of this. Not to say that futures are no longer popular, but at some point, you know, there's going to be a positive funding rate and it's not going to be actionable to say that it's going to lead to a reversal. This is just the sign that you pay attention to, right? To start looking for other signs of weakness, right? Other signs maybe in price action, in absorption, lack of momentum, to really build a case for, okay, maybe this is, you know, temporary high that we're going to put in. It's the same concept of looking at RSI and looking at divergences. It's not that you act on them. It's not that you act when RSI is first overbought or oversold. It's just that, like I say, you know, it's like a flare. It's like a warning shot, you know, to start paying attention. And again, history has shown that in terms of our entire sample, when we start going above the premium index and have this positive reading, that is something that comes along with tops, right? Not tops for the trend, the entire trend, but tops for the interim, right? Tops for the consolidation we're in. Okay, so we go back here. When you start putting in tops, okay, when you start, this just was the beginning of a markup after it was completely negative for a really long time, but you can see that moving forward, right, every time it's gone positive, it's been an indication that the market is getting crowded long, all right? And you just start looking for opportunities in the opposite direction. It doesn't mean, so in this case, I'm not really taking it as much. So prior, so just to clarify, prior, if we saw something like this, you know, I was looking for shorts under the same sort of thesis, right? But in this situation, there's a big change in context. So I'm not necessarily prioritizing suddenly looking for the short as much as I am just getting ready for the pullback. Okay, so let's see. Yeah, we try again. You know what? It's because I just talk. It's just because I talk. I just go on and like I said, there's no script. I wake up in the morning, have a few ideas of what I want to talk about. You know, we brush. I really want to, you know, just point out this morning that that, you know, equities are moving up, risk on. I think that you're going to see this continue. Marijuana sector, like I said a couple days ago, look at this now. Everything gapping up the last few days, gapping up. And crypto right now, short-term correlation to gold, but I think it's going to follow those. Okay, so just to clarify why I got down that path again, I think it's going to ultimately follow those. I think gold is, if you get anywhere, you know, down here, below here in this 18 level, I think the gold does just something like this either way. I think the gold is likely going to appreciate over time. Any other questions, guys? And I'll get to, I want to take a quick break for questions, but then I'll get to some of the other charts that I wanted to look at. Because there does, you know, well, before I get into it, I'll give you guys a second to see if you have any questions. Nam, take care. Thanks for joining. Dinner in Scandinavia. Nice. Enjoy it. What time frame funding do you use to determine when market's getting overheated? Well, the funding that I look at is anywhere from the hourly chart and above. So once I start to see it on the hourly, so if you go to, because you could, think about it. You can have periods where on the short term, in the interim, price can swing around, right? And you can have you can have spots trading slightly below futures, trading slightly below spot, back and forth on the lower time frame. But what you want to see is that consistently it's maintained this, right? So I would say the hourly is probably one of the best things to look at. The further down you go, you can see that it's going to become a little bit more noisy. The premium index, now when I'm looking at basis, that's where it's going to become noisy. Premium index is not just basis. It's a derivative of basis, but it's a bunch of other things as well. It's not a bunch of other things. It's just a calculation that takes more into account than just basis. But I look at this on the hourly chart, right? I look at it on the hourly chart because that means to me at some point that it has developed. It is consistent. It's not something that's short-term, hourly and above. Right? There are times when you see it start to develop on the hourly, but again, it's not going to show up on the daily. Once you have it on the daily, though, I think that's when you just absolutely can't not pay attention. Or can't discount the fact that, hey, we might be approaching a turning point. Again, short-term turning point. Markets need to sell off. They get overheated all the time. Okay, BTC intraday levels. Cool, we'll look at those. And then we'll look at some alts. Just take your alt requests. All right, so let's go to XBT. Where's my, there we go. All right, so intraday levels for BTC. Let's go to the TPO chart first. We don't really have any poor highs or poor lows that I think are standing out. Again, this level I think right now needs to be defended. You can see that we came into yesterday's open. So yesterday's open is around 14.8. So think 14.8. We came into yesterday's open. We didn't have a really strong response. You do have this staggering of lows now for the past few days. So we have 3 days, staggering of lows, but again, those highs have not really done much. All right, highs haven't done much. Okay, we're above where most of the volume has come in, so that's another important thing to point out. So aside from yesterday, okay, which was a good, nice, strong move after this sell-off, aside from yesterday, most of the business has been done above us. All right, so if we look at the day prior, we're looking at the volume. So we'll close this up just to show you that point of control. It's up here, right? So point of control is at 15.5, all right? Price right now, 15.2. So if we're just using that alone, we're going to say that buyers are more uncomfortable that have gotten involved since the 6th than sellers are, right? You'd have to imagine that if you just took 1-for-1 of that activity, that, as long as price is below where most of the volume came in, that sellers are in better position. So we're looking at the point of control that is above us. You got daily VWAP that's slightly higher. By all means, right now, it looks in the short term and the interim that sellers are in control. Local levels that I'd be focusing on, again, that 14.8 level, that's yesterday's open. That's because we do have an inside day setup from yesterday. Clearly, when the market broke through to the upside, that inside day setup did not resolve in higher prices. It didn't resolve in, a selling tail though. So it's not like the story I think up to this point has clearly been that there's no real absorption to the upside. So what the market is doing is it's moving higher, it's getting kind of exhausted, it's losing a little bit of momentum, and then it's selling off to find buyers again. So what we've seen in the last few peaks is rollovers, right? That's what we've seen. We haven't seen absorption to the upside at all. So we've seen rollover. So rollover will typically leave poor highs. So if we look at, for example, let's get out of this tool. I want to get rid of these. So if we look at the last few days, we don't really have poor highs, right? We have decent high. It qualifies as a non-poor high. That's an all right high, but it's not that we've actually came into any significant level, though. We still have a poor high up here. So the market has been unable to rotate back all the way up to this high. No, we don't have poor highs here, but there's no real oomph to the upside, right? And we haven't cleared this high, and the poor high represents a target. So this high, I'm switching between my drawing tools, trying to get, there we go. This high is at 15, that's right around 6, right? The poor high is something that you'd look to for stops to be taken, right? For the price to revisit to clean that up. But the poor high happens a lot of times because the market just rolled over. So you got a poor high up here. You've been unable to retest that level. Most of the volume is now above us. I think that you're just seeing a roll again, right? And the market is overheated in terms of derivatives. So this all kind of adds up to, in my opinion, breakthrough yesterday. I think it sets up for a nice play that is taken through a break of yesterday's open, which is around 14.8. I gotta get a drawing tool that, or I just gotta use hotkeys on Sierra and TradingView, because I keep switching between my my screen drawing tools, annotation software, and then expecting that when I click, it's going to draw it on the chart too and mark the price. So I think that your 14.8 level is significant. Now, could be developing a range, right? One of the things that I talked about was this day maybe being the important daily low, right? So maybe that's the important daily low. You have a clear consolidation that's forming right now between 15.6, 14.8. So that daily low, if it's defended, I think that it just does open up an opportunity back up to the high, right? So let's say that, and we saw this many times, right? We saw many times before where prior we've revisited that area and been quickly rejected. So you have a spike into the low, quickly reject, and what do? You revisit the high. So I think that your first low is, in this case, in this market recently, is the one to pay attention to. So you're looking at that close, that open, which again, 14.8. And, looking at the last few days, we have a little bit of a composite that you can form. I think that maybe in this case, I say you don't want to include the trending day. But I think that, to get a better idea of where we might auction within, because that includes, the only reason I'm doing this is to make this easier for you to see, because ultimately that trigger for the breakdown, it's below this. So I think that combining this is actually just a good idea to combine, to give you an idea of where the range might develop. So let's say that price takes out 14.8, breaks down to 14.8, immediately breaks back up, and now we're back above 15. I think that ultimately you get a revisit back up to this 15.3 level, right? 15.3, 15.4, and you're just really looking at, and why I'm considering before this point of control is because you might see some selling pressure come in before then. I think at that point, you nuke, I say nuke, I mean, spike it, 14.8, 14.9, reclaim 15. I think that you're looking at mean reversion back up to 15.3, 15.4. Because you do have a really clean range that's forming. And, same as prior, right? We know the level. We know that it's very important. So we'll give it we'll give it a lot of weight and say, all right, if we break 14.8 with conviction, yeah, you're probably coming back down to 13.9, 13.8. So for example, what would that look like? Let's say that we break 15.8. Let's say we start breaking down here. And you don't see an immediate response. So you don't see an immediate response below yesterday's open. You're back into a tail, right? You have a tail below that, so you should see a response higher. The case was in the last 3 days there has been a response slightly higher, except for today. So today's response not as meaningful as days prior. So looking at these tails, all right, you're just seeing that price is approaching yesterday's low and you have less of a buying response. So you have these tails that are right here. I think that if you get something that moves into this level and you start to see that it's slippery, right? It's not catching its footing immediately back above. So ultimately the long you're waiting for it, right? It has to mean that you see price come back above, in this case, 15, 14.9. So let's just say, hey, we break that level. You're not going to get long at this low, I don't think. I don't think it's a good idea. I think you get long once it's back above, right? If it doesn't start to get back above immediately, I think you have a quick breakdown play. So I think you have a quick breakdown play because, again, just not seeing that much of a response down here. The past few days haven't offered that much of a response either. So being that the highs look like they're rolling over, I think it just sets up for a spill. But again, you could range between ultimately 15.6 and 14.9. So that is, I think, in terms of local levels, you have more of a setup. So let me just pull this forward. You have a setup here. Well, now we have. This is a good idea to use this because we have this line right here. So previous day close. Let's say we get one of these, spike that, and then you get the setup back up to, I would say, around VWAP, right? So specifically, I said 15.4, 15.3. Probably up to VWAP, right? You start to see VWAP up here. You get the break above. You get the break above yesterday's close, back above. Trigger maybe something like this. All right, and then you're returning. You get a $300 move. But if you don't get that immediate response, I think that you see you see lower. And, you know, not for nothing, into the low, what would you also want to see? You know, let's say that this is the low that we're focusing on. It is. All right, let's say we get this spike and it's quick. You know, what would be a better sign, right, versus a really deep probe would be something like this, right, where CVD continued down as price found its footing. But so far, you don't really see that there's any absorption to the downside. And this is lower time frame, right? There's no real absorption to the downside. Price is making lower lows, CVD is making lower lows. At the same time, you don't see that to the upside. So again, it's not like we're getting absorbed at the upside. All right, it just is that, you know, price is kind of rolling over. All right. Attack of brain fog. Yeah. Okay, guys. Any specific charts? Otherwise, I want to look at the correlation between AVE, SNX, and Rune. So these are assets. I'll look back at the questions in a second. One sec. So I think that you have to follow the smart people in the space, and there's been a lot of larger players within the space that have been talking about SNX. You know, we shared SNX in our first newsletter, first, second, and third newsletter. So SNX is something that, you know, we've been confident in a really long time. SNX, Rune, okay, and then AVE, all moving, and Wi-Fi, right? All moving in a relatively similar fashion. Uni, what are we looking at? Uni. Okay, so you want to look at Uni. Okay, I thought maybe it was hey, take a look at the Uni chart. You got something going on. So let me just add that. Let's put BTC. So with all of these, reorganize this. Let me move these together, actually. Nah, it's fine. Clear strength against BTC. Right, so if we zoom out on the SNX chart, you know, SNX came back, retested its higher time frame, once resistance, this time as support. Very strong response off of it. This is a BTC chart, so it's showing strength against Bitcoin. It's not just a USD chart following Bitcoin, right? So this chart, I think, with, let's go to Wi-Fi. This is not the chart I want to look at. It's because it doesn't have all the price history. I'm wondering why. I'm trying to, let's go to, is it on this? There we go. This is the kind of chart that you want to see with alts. All right, we have a few levels that are retaken. So you got a major weekly level, so prior weekly level. All right, so that major weekly level here, you got your daily levels retaken as well. So going back, any one of these daily levels, this level, this level, this level, we'll just go by this level. All right, so you've managed to get back within this structure. Okay, and this is where you're ultimately looking for a trend reversal. You have price above a weekly level. So we talk about this in BlockRoots all the time. You retake a weekly level, you look for support at that. It's typically indicative of a trend reversal in alts on a weekly chart, right? So I think that SNX, considering the amount of strength we're seeing in it, I think that it's a buy between this 3.5 and 420 area. So if that occurs up here, if that means we come back down here to the low, I think that ultimately it's a buy. SNX, AVE, they all look the same. Okay, SNX, AVE, Rune, Wi-Fi. So this is AVE, same deal. Oh no, it was AVE I wanted to look at also. No, AVE is short term, excuse me. SNX, AVE. Same thing, all of them showing strength in USD and against BTC. This kind of chart, you're more often than not going to be looking at a structural area to get involved, but you'll never get it. So I think that I'm probably going to start building a position as long as we start to see that ETH BTC is showing strength. So we want to see that ETH BTC continues to show strength. You want to see that Bitcoin dominance is not just continuously going through the roof and leaving everything behind. I will be building positions in SNX, in AVE, in Rune, because they're all the same thing. They're all these four pairs are all showing incredible amounts of strength. With Rune, I think it's a bit more obvious because you're now back above a consolidation. So if you look at this daily structure, it looks like we're making a clear break. We're on our way to making a clear break out of this higher time frame consolidation we've been in since September. This and then one other. So we got SNX, Aave, Rune, and I think honestly Wi-Fi is, I don't want to call it too early, but it did what it did, right? It was looking like dead cat bounces all the way down, but the moment that Wi-Fi starts to reclaim strength in this area, so we're looking at between 15 and ultimately I would say 13 level, it's retaken prior levels that it was having trouble with. So it's not that I think it's going to V-shape reversal and continue to move up. I think it's a sign that as long as the rest of the market remains healthy, that Wi-Fi, all of these new blue chips will go on to put in tremendous gains, especially if they're added to things like Coinbase when you have new retail coming in. So SNX, Aave, Rune are all moving, and Wi-Fi are all moving kind of lock and step. So if you're seeing one make a move to the upside, I think if the other one isn't, that it's an opportunity to play a correlation play. So let's look at Uni. That's perpetual futures. Uni BTC. So these charts are somewhat similar, right? But they're just not showing the same strength. So if we look at Uni and then SRM too, which is similar, these are things that I wish were doing well, because originally I got positions on and got out. And SRM, Uni still looking, damn, I got to get better at this. SRM and Uni looking very similar. So we'll go to Uni again. Retaking a previous daily level. So this little daily support, that's so brief though, right? There's really not that many important levels on the chart. I guess you could say that weekly high, which is right around 21,922. So ultimately that means you're looking at price reclaiming, and you're probably going to move sideways either way. There's not enough from Uni yet, put it that way. It's hard to really say that looks that good. Wi-Fi though, on the other hand, Wi-Fi BTC, all telling a much more clear story with regards to their price action and their structure. Yeah, Qcoin, that's right. It's a pain in the ass when you don't have full price history, because then it could change the way that you look at, it could change your opinion about the pair. But SNX looks awesome. This weekly level, if we maintain this weekly level, I mean, that's hyper bullish at that point. I don't know if we necessarily do. That's why I'm saying 3.5 and 420 is a good area, I think, to get involved if everything is still on the up and up. Okay, Kava. First look against BTC. Not a very strong presence against BTC. Arguably at a weekly level though. Prior weekly level, but it doesn't look that strong against Bitcoin, right? And that's I think one of the most important things right now is that your pair looks strong against Bitcoin if Bitcoin is going to continue to be strong, or at least strong against ETH if ETH continues to look strong. USD pairs are different, right? So if you look at the USD pair, this looks like, and it's there on the BTC pair as well. It's retesting an important level. But if you're looking at the USD chart, it looks much more substantial, right? Because this is your consolidation. This was, again, one of the first assets. This was another one of these that we talked about in the newsletter, the first or second issue. And it was basically, we're back within this range. This is a reversal. We're going up. Price discovery. So retesting the top side of this range, you don't want to do that. But on a higher time frame structure, that's normal. This looks more bullish though, right? If you're looking at this USD chart, it looks a lot cleaner than if you look at the BTC chart. Remember though, against Bitcoin, Bitcoin has done a lot of different things in this period. But Kava, I would rather Kava retake something like this prior pivot that we have right here. Support, turn resistance, so back above, let's say back above 11,000. And then maybe you have a case to be made, right, for a revisit back to these lows around 17,000. And Bitcoin, and then at that point, the USD chart would probably be telling a very compelling story as well, because you'll probably be above these highs. or above 170, same idea would occur in that situation as well. So for me, I'm actually starting to build position in Wi-Fi. I mentioned that yesterday, Wi-Fi, SRM. I'll be building positions in SNX and Aave and Rune. But I think that anywhere within this structure is a good area to build, because I think that you're starting to see, I was skeptical at first. I'm skeptical. So we have to make sure that we distinguish what I mean when I say DeFi. You know, DeFi as a whole, I think a lot of DeFi is cooked right now. The blue chips I don't think are cooked. I think that this is capitulatory right here. That type of reversal, if it reclaims the top side of the structure, that is, you know, this is your Raven coin in the making, your Zilliqua in the first month, right? Where this looks massive, looks like a huge drawdown, but really this is something that goes on to look like, you know, that. And it's not out of the question for Wi-Fi to be over $100,000. It's just a function of market cap and supply at that point. So anywhere between, I think that as long as we still see strength, I mean, arguably with Wi-Fi, you want to see these lows maintained, right? Because you have some sort of semblance of a trend line that's beginning to develop. You have this little wedge. So if you get the break above here, maybe you wouldn't want to lose 13.7. So maybe that's more reasonable. I have no problem building a spot position between this area, just because I play a little bit differently with spot. I'm playing more of a higher time frame macro thesis with regards to BTC at that point, and this being a blue chip that's going to move up with Bitcoin. ZIL, I don't even know about anymore. ZIL is, my point was, ZIL was in the beginning in 2018, Zilliqa, Ravencoin, you know, you could have sold them after this, thinking that they were done. So we'll go to, let me go to example real quick. Go to ZIL. Okay, let's go to, what's the longest chart? ZIL Bitcoin, probably, right? Maybe it was Ravencoin. I don't know if this was the chart. I think that was the first one. That might have been Ravencoin. These went on tears, I mean, if everyone remembers. All right, so Ravencoin did two almost identical pumps, but one was massively, much larger than the other. I don't know if this is the best example either. I think it was ZIL I'm referring to, and it was just because I remember what it was like in the moment with ZIL, where it looked like, you know, for example, you have this big move up right back to the high, and then it's down 25%. So not the best example, because actually Wi-Fi is down substantially more than that. Unless there's a longer term chart. I don't think there is, though. Let me see. Let's go to CoinGecko. You know, the idea is with as many charts where you could see this behavior. Is it back here? Maybe it's the USD chart. Nope, not that. One sec, guys. We'll find this. Okay. Might have been back here. So this is February 2018, but that's against USD. So that's what it was. It just, it had this pump. It went up to, no, wait, here it was. Sorry about that. Come on, zoom out. It is this high. So you had a, it was it doubled, or, you know, well, let me find the chart, because now it's bothering me. Because I'm trying to use it as a reference. There we go. Ah, that's on Binance. It doesn't have the full history. I'm about to quit on this. Okay. Is this it? No, that's not it. And one last one. Maybe it was on Bittrex. Huobi. Where's the entire price history? Someone will have to show me. Tell me in the chat which exchange has the entire price history of ZIL. Either way, the idea is, the most important thing we're trying to talk about, is that you look at this chart right now, and it looks like it's already over, but you know, you need to look at a log chart in the future just to see this beginning. And the, you know, the best example would have been to use Bitcoin, right? don't know why I didn't just use Bitcoin. You go back all the way in Bitcoin's history, and it would have looked like it was done, right, in the beginning. You know, if you looked at any one of these pumps in the beginning, you would have thought it was done. Same thing could be said with Wi-Fi. So POLS. Polka starter. Interesting. I don't know a whole lot about this, but maybe fill me in on this, because this is actually... Let's go to a... let's go to a different chart that'll pull this up. There we go. So cleaner look than Poloniex, which looks like crap always. What is this against? Just want to make sure. Am I against ETH? Okay. So it's the same sort of thing looking at this as on this chart, but this is just the USD chart. Either way, with this you want to see that it's above this more recent high, right? You have a little bit of a range it's forming, and that is around 474,113, 474, whatever this is. This is against ETH. USD, it makes it a little bit easier to talk about. It's 18 right now, 18 cents. And that pivot puts us back above, more than likely around 23 cents. So if you're looking at this chart and you're just looking at this on the daily, same idea with looking at other alts, right? You have a series of lower lows, and then hopefully you're retaking a prior low within that structure that occurred on the way down to make a case for the trend reversal. I don't know a whole lot about Polka Starter. I'd be interested in hearing more about it though, because it's part of DOT, right? And I am interested in DOT as well. So DOT, that 450 level for me is important for DOT. It's definitely having struggle. It's definitely struggling though. It's not as weak against BTC. It held up in terms of strength a lot more about 2 weeks ago, 2 weeks ago. Now it's starting to sort of dissipate. But any other pairs you guys want to look at? MTA is one that I would love to see start to put in some type of reversal. But again, you don't have a whole lot. You know, you have this consolidation that you could really focus on as, all right, you know, low, low, low. So maybe you start to make a case for this if we're back above this high right here. You know, trading back above, let's say, 123, 125 is probably the best bet, because at that point you've left this consolidation behind. Because you can see this consolidation looks a lot similar to these, or very similar to that one. So too early to call it for MTA. Yeah, I don't know a whole lot about polls. All right, Wi-Fi. This is another one that looks good, right? If you're looking at this against USD, let me make sure I put up against a BTC chart as well. Looks good here as well. Okay, so ultimately we'll use this as the chart to pay attention to, just to convey the idea. Back below a prior daily swing low, right? You have this daily swing low going back to October. Consolidation loss, treating as resistance, now back above. This is the start of what looks like maybe a short-term reversal. Now that's just what you want to see, right? You want to see you reclaim levels that you made on the way down. You're trading back above them. Against BTC, it's still showing strength also. So this is, I guess, corroborated by both charts. And it's something that's obviously going to trade similar to Wi-Fi. LTC. Not sure that LTC is something I've really paid attention to recently. I think it's kind of just fallen off the map. Yeah, that's a bad chart. It's a really ugly chart. You don't want to be in LTC. Put it that way. Maybe you want to be in it when it comes back down to this low, or if it starts trading above a more recent high, but just showing complete weakness against Bitcoin. you know, when it's the Bitcoin pair chart, it's showing you, you know, if it's stronger or weaker than BTC, put it that way. And it's moving down continuously over time. The only way that you could say it's suddenly maybe at this point worth paying attention to is if it starts trading back above, you know, our prior highs. I wouldn't even just say prior lows. I'd say you need prior highs and to put in a higher low. You get a bit of a different story when you look at the dollar, but not even really. It's just showing weakness. I mean, this is still in what looks like you got this larger, higher time frame triangular structure. And sorry, that was loose and stupid. But you know, by the time this is still moving sideways and coming to a point, ETH and BTC have already like left the station in terms of leaving their structure and choosing a direction. Litecoin, I think, is kind of irrelevant at this point. VeChain, another really old one. You guys mind me, this is the stuff I haven't been in since 2017, 2008. I mean, the chart's telling you one thing. Pump and dump. That's all it's telling you. That is all it's telling you. What is my... Interesting. Short-term violent fluctuations. I got an alert on my chart. Oh my God, we didn't even... The whole time of doing this, not even paying attention to Bitcoin moving back up off of this low. I mean, we were watching during this, but okay. So in terms of more recent structure... Interesting. You got that move off of the low. That's not looking too bad. You know, back above, just look at in terms of recency. Back above a prior swing low from yesterday. If you look at this on the TPO chart. I mean, you're inside of yet value, but again, it's not a balanced day. It's not the best kind of structure to look at to create that sort of thesis on behalf of, because it's not a balanced day. But again, coming into your resistance, if you move up, is going to be that one-day VWAP, which is going to be between 15.3, 15.4. What did we say it specifically was? Right now it's at 15.359. It was at 15.37 before. But this is the area you're going to want to see price do a good job of getting back above. So at that point, you know, maybe we test out that poor high that was left up here. Any other questions, guys? Anything you want to look at? Equities recovering after the, say, lunchtime sell-off. ETH BTC still moving sideways. Bitcoin dominance looks like sideways right now. VIX is down. That's good. It's good for Bitcoin, always. Higher prices in equities and VIX down, that's normal. Normally, you see the VIX go up only when equities move down. VIX was all kind of thrown out of whack though since March, so it's been kind of odd. Gold, let's see if we found footing, maybe temporary footing in gold. Why is Bitcoin not dumping to 13.8? Well, because buyers are buying. Because buyers are more interested in sellers than sellers right now. Don't count it out yet. You'll see. I mean, we'll see. This is good, though. I mean, don't forget, this could just be, again, a range that's developing. And something like this being the first low, this the second low. If you start to see that price is moving up towards this high again, you're probably going to get the expansion, right? You're probably going to get the expansion at this point. That high has not been revisited. So again, the whole idea for this breaking down to begin with would be on behalf of a loss of momentum or crowding. There was no rejection yet, right? This is due to fundamental reasons, right? This is your gold play, your stimulus off the table play, but there's no rejection yet at the high. So we haven't found a big seller yet. What we've found is that buyers are getting a little bit over themselves in terms of derivatives, and market is losing maybe a little bit of steam. But it could build up steam in the interim by just ranging, right? And then breaking further up. All right. So DXY. And we're probably going to wrap it up, guys. We're about an hour and a half into this. Isn't that cool? DXY moving up, Bitcoin moving up with it. So, well, not really. We have to make sure we look at them on the same time frame if we're going to say anything's correlated. No, you have the dollar. Yeah, of course. You could pay attention to DXY, right? Because that's going to have a, there's going to be the inverse effect with DXY and gold. Do I think mana? See, some of these things I wouldn't even look at. Let's add it. I'm so unfamiliar with so many of the altcoins that people ask about. Okay. Nah, this is not a buy for me. You got to be back above this consolidation right here. Within at least. So this is where things slipped, right? Fell back down to a prior range. You lost these lows, started making lower lows along the structure. So you need to be back with mana. You need to be back above, let's say 700 sats. This is the area you're going to find resistance initially. So if you're buying up here, just expect this. So, I mean, look what it's been doing the entire time. Would you expect any different? This right here looks like this. So just expect that to occur. Expect to be down here. I think alts can bottom out. The ones that are worth it. Not all alts. People think of alts now as, the entire crypto market. I think select alts do, and you got to be really, smart about which ones you get into. I think DeFi blue chips are good. I think that charts that are reclaiming market structure on a weekly basis are good. Do I think that something like this is good? No, I don't think that this qualifies. A lot of things are complete, garbage now and just pump and dumps pretty much. Just go through some of these charts. Just look at them. They're all dead. Not that one. That's Bitcoin, Turkish lira. They're all dead. Right? Theta, big move to the downside. Nano against Bitcoin. Everything's struggling. The only stuff you should be in is where eyes are right now, which is DeFi. And any pair that has been around for a long time that is still doing very well. No, it's not a bad idea to use cross leverage, but I wouldn't use it if I was brand new to trading with margin, because you're putting your portfolio at risk. In order of interest, SNX, Aave. I think Aave and SNX for sure. I think Aave in terms of fundamentals. I think you have to go with Aave. And also, if you're looking at Aave in terms of supply, I mean, that is an attractive supply. That is a really attractive supply. Okay, that's less than the supply of Bitcoin. So I think that I'm just going to start throwing money at Aave. Would you delete that, Sweet Canary? You'd delete Alpha? So yeah, guys. All in all, not Wi-Fi. Aave all day. I'd say I don't know. It's hard to do that. Why? Whatever one looks best. I think that Wi-Fi is your blue chip. I think you got to go in terms of a lot of times, and not just a compelling idea, but supply and demand dynamics, right? Supply being important, I think, in this market. I think that people are going to look at that scarcity and think it's really attractive. So I think that Aave, Wi-Fi, and then SNX, and then Rune. But wherever the opportunity is, right? If something starts changing on the higher time frame, we're not going to just, deny it. I think that, the chart has to look good, and those all look good. So, MTA, it sounded like a great thing. SRM, Sol, all these, but SRM specifically and MTA, not looking too hot in terms of the chart. So, can't buy it until it looks good to some degree, or there looks like there's a bottoming process taking place. Until that happens, right? Like, I can have my opinions on things and I could get loud about them, but once the chart changes, I change my opinion, right? Because there's no point in fighting the trend. So when I'm talking about DeFi not bottoming, I don't think DeFi bottomed. I think a lot of DeFi stuff is going to never move again, the same way that we had with the ICO period. So what entry target are you looking at on Wi-Fi USD? I think I just mentioned it, LP. I think that I would play a breakout above this 15 level in terms of futures, but I think that I will more than likely chop around in this area. So I'm looking to get filled between this 13 and 15,275 level. So I don't think that this is going to just do that. If it does, I'll have to chase it, right? If let's say, we get a big break above here to 20K, I have to look at the top side of the structure as a point to buy for spot. All right, let's say, because this is, just resistance right here. Let's say we get something like that. Even then, you probably still, I still think that you get a fill back down here. So I'm looking to get filled down here. I'll have to change if things change, but I'm also considering taking a higher time frame approach to some of these the way that I am with Bitcoin, where I have less of a concern with, maintaining the levels I might initially consider. There's some times when I have an idea for where I'm going to get involved, and then, some things change, and maybe my confidence is higher for whatever reason, and I'll change my, change the parameters in which I get involved. So I'll say for 1 week, I'll say, I need this to happen. And then maybe something else has occurred in the market, and suddenly I'm getting involved a little bit sooner than the level I maybe originally anticipated. I think a lot of that comes with discretion, though, and experience. In terms of Bitcoin, and I think one thing to pay attention to right now is in all of these bounces, are we seeing that there is future? So let me rephrase that. In this bounce down here, right from the get-go, from the low to the high, we started to see futures trade again ahead of spot. So what we want to start to see, I think, is if we're ranging, you want to start to see that spot is taking the lead again. So our futures beginning to base out, still kind of elevated, right? Closer to neutral than they were. But also, are we starting to see again that basis come back? And you're starting to see that a little bit. So I'm not getting overly excited about Bitcoin breaking to the upside yet. I think that it'd be better if it doesn't matter what I think, right? If maybe you do move up and you're ranging, and over the course of this ranging, you start to build again that negative basis, that premium index below in the negative, to give you a sign that maybe people are betting against it heavier, and that maybe there's another squeeze in the making to take us upward. That's about an hour and 30 minutes into it, guys. So I think we're gonna wrap it up. Yeah, unless you guys have any other questions. Just to recap, there's no real absorption at the high yet with Bitcoin. There's no real sign of a major seller yet, besides spot selling on Coinbase. Going back to here, no major signs that the market is doing anything other than just losing a little bit of momentum. And that's why markets move sideways. All right. What percentage of your portfolio is in stocks? Well, most of my portfolio is in stocks. So Bitcoin is the most exciting market, or crypto is the most exciting market, but most of my total portfolio, we're talking the war chest, the, what do we call it? What Ray Dalio calls it, the all-weather portfolio, most of that is in stocks. But what is most, right? Most might mean 51% versus 49% in Bitcoin, right? A very large portion of my portfolio is in crypto. Doesn't mean that the other remaining portion of my portfolio is just in stocks, though. You get how that works. There's multiple slices in this pie. One of the things that I'm doing more recently is looking to pick up cheap property. So that's another portion of the portfolio, right? So crypto is a very large portion of the portfolio, but down to specifics, stocks are weighted a little bit more heavily than crypto. But, the thing about that is, which one of my portfolios is older? Which one of my portfolios is older? Stocks are definitely older, right? Yeah. Would I don't know. Yeah, I wouldn't have yeah, no, I'm not going to change around too much. I always catch myself starting to go down a tangent and thinking, well, maybe do I want to change more to crypto? No, yeah, I definitely plan on adding more to Bitcoin, but I think I'm going to keep the levels that they're at right now. Um, the levers that they're at right now are great, so there's no need to overly commit to one side or the other, just for the sake of the market right now is markets in general are more correlated, I think, than they've ever been. So it's not like you could get away from systematic risk, things like we saw in March. At this point, you know that there's really nothing you could do about that unless you're in cash, right? Um, but you obviously don't want to be exposed to too much of one particular area because again, there is a lot of risk in crypto still. Hopefully, that's being smoothed away, but there definitely is a lot of risk in crypto, and that's why you don't see, I guess, as many people as you do in stocks because again, you don't have to worry about counterparty risk really in stocks. You do, but you don't. It's a different conversation. No, I've never used Seed Invest. No, nope. I think that covers it, guys. I'm gonna wrap it up. So I guess if I could just leave you with some parting words, Bitcoin looks normal right now. It looks normal. No signs of absorption at the high. So no signs that buyers getting overly aggressive at the high and that sellers are sucking all that up. So nothing like that. Sign that maybe the market is overheated. So sign that the spot has not followed this up as strongly as the derivatives up here. You get in the market more excited. People are looking to lever more. Little late retail, I guess, looking to lever more. You do have a slight loss of momentum. Okay, the first high that we put in, it's a poor high. Going back to, the highest high, is a poor high. So that says that the market came into this level and was not rejected. What would a poor high not look like if we left this? So this single print level. So see how this is why using a TPO chart is beneficial. This TPO chart is blunt at the high. Okay, so we have a poor high, so it's not like we ran into sellers tremendously. It's not like at the high we have any CVD divergence showing that buyers are getting absorbed. So we don't have any of that. We just have a loss of momentum. So we have a market that might just roll. We've seen this happen, this entire trend. So it's not that the market has been absorbed at the highs at all for any of this trend. So you haven't really had absorption in these locations. You've had roll. So it's where the market gets just committed into one area, where the market is long and needs to sell off, right, to relieve some of the pressure. The markets need to sell off before they can move upward. So what can you do? You can look for the first signs of this occurring on a higher time frame, which are things like basis. So you look at basis. Is the spot maintaining a premium to futures, or is it now the inverse? Well, now it's starting to be the inverse. So maybe we're in the beginning of this phase. Okay, so we not only have that. Is there a sign that we're beginning to range to begin with? Yeah, you've rejected clear highs, clear lows so far. So you have your important levels that are potentially might be extended into this a bit further. And then at this point, are we maintaining where the volume came in? Well, you're starting to see that most of the committing has occurred above where we are. So most of the volume is above us. Now we're below our, what am I looking at? This is the 15-minute chart. Now we are below our daily VWAP and our weekly VWAP. So where most of the risk was put on in the last week, we're below that. So buyers that put on risk, they're in trouble now, right? So what you'll see is that when the market is long into an area, it might range a bit longer. It'll put in a clear range, and then it'll roll over under its own pressure. So it's a delta unwind, right? You'll get a lot of volume into the high. No real absorption though yet, but the volume will unwind because at some point the market is just losing steam, and it'll lose a significant level. And typically your significant level in this case will be the first major low you put into the structure that the market got long. So this is the area the market got long. We're just referencing this. It's not the area the market got long. People are getting long everywhere, right? But this is the area where you're starting to see that loss of momentum. This is the first low you're paying attention to. This is where you have your inside day setup. So if the market ranges here, all right, let's say you poke this high and then you do get rejected, you have a few cases to be made for now this low being very significant, right? And then your trading opportunity might set up as a roll with acceptance below this low for a move down to 3.8, 3.7, 3.9 area, right? Those are, it sounds like, oh, well, what's the area, Ryan? Well, it's not that. It's not a line. It's an area, right? So it's 3.7 to 3.9. That's the best we could do until we see how price responds. Price could nuke that immediately, and that's the purpose of understanding that, you know, you could sleep comfortably knowing that, oh, that's not the only important level on the chart. It just means you look further down, right? Maybe you get it there, maybe you get it back down at 12, you know, 11.9, 11.8. But that's that, guys. Everyone have a fantastic evening. Wednesday, we will do a giveaway, so that should be good. We'll maybe give D. Ross another opportunity to win $100. Everyone else gets the same opportunity, though. Everyone have a fantastic day. If you haven't checked out our partners at Phemex, go to Phemex.trade. If you use that link, you will save in terms of maker fees. So that's always nice because that's where you're going to be spending a lot of money if you're trading frequently. You also can trade spot with no fees if you pay the subscription. It's less than 2 Starbucks coffees a month. I think that covers it, though, guys. Everything's good. You know, I just this was kind of one of those streams where it was a little bit all over the place. But this was a pretty wild morning in markets. I think that, you know, Bitcoin is pulling back a bit, right? I think that, you know, all of us, though, want things to improve. So I'm willing for Bitcoin to come back down, right? If let's say the idea of a stimulus is kind of off the table in the short term, I'm willing to bear that, and I'm completely happy in this moment right now, honestly. You know, I'm happy even though, you know, when Bitcoin moves down a little bit, my portfolio, because it is heavy Bitcoin, moves down a lot, right? But I'm happy, right? And I think everyone should be happy. I don't think you should be skeptical. You don't want to be too much of a skeptic or a cynic. What's that saying? A cynic or a skeptic? To, you know, to them, one is none and two is one. I think that you have to try to remain positive now, right? I think that we want people to be in a better place. We want people to be able to go back to work and to go out to eat. You know, I want to go to restaurants, right? I go to excuse me. I got for Stan. Stan follows me on Instagram. Before he yells at me, because I go to restaurants all the time. I mean, my wife and I eat out maybe 5 days a week, but sound like a jerk. But I want other people to be able to do that. You know, I want people to be able to go to work. I want people to be able to spend time with their grandparents, not worry. Hug your family, all that shit, right? All that shit, all that stuff that just is a, you know, better. It's a better place for everybody. I want to hit up a museum. I would think of all these things I want to do, you know, and I don't want to just do them because I could do them now, but I want other people to be able to do those too. So I think the better days are ahead. All right, guys, have a